what we have right now is slightly bullish. All right, and the reason for this bullishness, right, is that there are a lot of news that China, US are coming out with vaccines. They are in their first stage of testing, and there are also countries that are planning to end their lockdown, mainly in the Asia countries like China, Vietnam. So with such things, right, people are getting a little bit more bullish about the market, anticipating that everything will come to an end. And there are also stimulus measures that is happening. Firstly, there is the US $3 trillion being passed stimulus package where US citizens will be getting like money to spend, 1,200 payments to from the American taxpayer. And recently, there's a Franco-German 500 billion package. They're going to propose that, to help the European countries. So with that, on my previous video, I talked about my worry about the European countries going bankrupt. Well, probably they are trying to prevent that from happening, with this relief fund coming up. So at this moment, because of the pandemic, we are already 4 months into this pandemic, and for China, they are 5 months into this pandemic, and they are going to open up their market soon. So based on SARS time, from the first patient being diagnosed to the end of the virus epidemic, the during the SARS, right, countries take about 8 months for all of this to recover. Now for China, they're already 5 months in, and if you are looking at 8 months, right, we are looking at August where China will be fully operational. So in such case, right, what are sectors that are going to benefit from this? Now, we all know that the staples, the those companies that sells food, e-commerce, tele-doctor, teleconferencing, Netflix and such companies has already moved off. The next sector that I think is going to move off, like based on Singapore and Hong Kong, is the retail. All right, retail and the commerce industry. Why I say so is because a lot of people are already being frustrated, being cooped up at home for many months, and they really want to get on out and bring their families out for real food, proper food. So in the last video, I already talked about, there are companies like uh, Hai Di Lao, that are making new all-time high as China market is opening up. So this is something where I'm looking at. Now, for the global market overview, let's take a look at the S&P 500 index. The past few weeks is having a seesaw ride. It's been down a few days and then up a few days. So this gap up, right, is mainly due to the news about the vaccine, coming out of vaccine by China and the US. So this is how it turns out. So we have to see from this because based on the Asian market, like the Straits Time Index, even though of the positive news on the previous day, the gap up, today the market starts to sell down again over the days. Even like the Hang Seng Index, making a small range bar, they are undecisive. So it's hard to gauge, whether the market will be up or down. So it's best that we still be cautious. Anyway, most of the moving averages are all pointing downwards. Okay, so we just have to be mindful of where when we are investing. Now, one thing that's very bullish is the commodities, the metals market. This is the gold, spot gold. You can see the past 2 weeks has been on the up move, and we have this platinum. There's a breakout, move off after this crash during the COVID crisis. It has already recovered mostly. This is the silver market. This crash was like quite some time ago. I still remember I tried to go out to the bullion shops, or even online shops to buy silver bullion, but all are sold out. Practically, they do not want to sell cheap silver, and they are hard to get silver bullion at a cheap price. So at this moment, the silver has already recovered, and it's rallying. Now with the three metals, the gold, platinum, silver that is recovering, it tells me one thing because a lot of countries are coming out of stimulus plan, they're printing money. So investors they are putting their funds into precious metals to hedge so-called the expected inflation that might happen due to the stimulus measures going around in the world. Okay, so let's look at the Singapore market. Now, for the investors part, I'd like to talk about SIA. I've been receiving a lot of questions about, can we buy SIA? It's really cheap, Sure, 怕是没多 lah, the government is backing this company. So, no doubt the government will back this company, you cannot let it fail. It's the icon of Singapore. But right now, there are no planes flying, or roughly like 4 planes out of their fleet of 156 planes, right? Only 4 planes are flying, which means to say this whole period, right, they are going through a cash burn. They are burning cash for this, just to tide through this whole COVID crisis. We are looking at the operational stats of SIA. The performance of the SIA group, right? Singapore Airlines, we just look at the number of passengers in thousands. Up to April 2020, there are only like 9,200 passengers flown with SIA. Compared to the previous year, the first 4 months, they had like 1.7 million passengers, which means they have a drop of 99.5%, in their passenger load. That goes to say is that nobody are flying. They are going through a big cash burn, and the thing is, in January they roughly flow like 3/4 strength because China closed off. In February, they are going like half strength. A lot of countries in Asia banned flights, or Singapore also cut flights coming from China and all the COVID countries. And come March, we basically have a total lockdown, all right, and no planes are flying. So come April, May, we already have 2 months that no planes are flying. Okay, and June probably is going to be just a few flights. What I think is that the second quarter, right, will be one of their worst results in their history. And as such, now due to the rights issue and MCV, a lot of people are saying, hey, we should just buy SIA. It's now it's like so-called 10 years low price. Now it's like 357. So from what I see is that, yeah, we can look at buying SIA, but probably not at this price. I mean, if it goes below the $3 rights issue price to buy, from where I calculate, it could probably hit $2 too if their results come out in the second quarter, which is will be much worse than what we expect. Okay, so for at this moment, I don't think we should be investing in SIA. Firstly, it's in a strong downtrend. They are not flying, they are not making any money, and they do not have any other revenue streams. So these are the reasons why I think we should not invest in SIA at the moment. Okay, if it went down to a very low price, right, $1 plus, then we see how. Because if SIA couldn't survive, there might be a possibility that Temasek Holding might take them private, like what they did to SMRT. Okay, so if that happens, we might be looking at a nice profit, if we buy at a low enough price. Go on to the next one. These are some of the stocks that I like, but I will not be investing at the moment. We just want to keep track, monitor, see where the price are in terms of value. Is it really enticing? This is SATS, okay, running roughly about 6.6% yield based on their previous dividend, and a P ratio of 14. So there is this big gap down last week. Okay, this is due to a notice whereby they announce a profit guidance of a 60 to 70% drop in their revenue. So therefore, that explains this gap down. A lot of people are selling in sets. So we just have to see. Like for most of the investors, I would recommend looking to accumulate or buy on or after the second quarter result, because what we're going to expect, the second quarter result will be the worst one in most of the company's history. So I think that is the timeline that we should be looking at. Okay, this is Capital Mall Trust. Mentioned before, roughly like 2-3 weeks ago, is building a base. Okay, roughly about 2 months. And today, the past few days has some buying happening, pushing the price up and breaking above this resistance of around 189. Okay, for Capital Mall Trust to be trading below $1.90, right? It seldom happens. Last time it happens roughly is in 1516 time. So it's roughly running right now about PE 10, dividend yield about 5.3%, and they have a deal on with a Capital Commercial Trust. They are buying over Capital Commercial Trust, and at this moment, they are still pending an EGM for the approval for the shareholders on this merger or acquisition. So this is something where we can also look at to invest in. Cecil Reed. Okay, as I mentioned in the beginning of the video, is that we are expecting China to be opening up, and the first thing to be open up and attract people, customers in retail malls, commercial and industrial companies starts to reopen their business. So this is Sassia Reed. They are doing a very nice kind of nice concept on retail, with mixing with entertainment. It's something like a resort without a casino. This is mainly in China, dealing in China. It's running roughly about, give or take, 7% yield, based on their reduced revenue, and a PE ratio of 7. Right now it's forming a nice base pattern. It's more like a continuation, and they are going to give XD dividend on 28 May. So I'll be expecting maybe in beginning of next week it will start to move off in anticipation of the dividend. Now, for those who want to invest in an ETF, I think right now a very interesting thing happened is that this is the Hong Kong Tracker Fund. It invests in the 50 constituent stocks in Hang Seng Index. So what happens is that recently they have a news saying that they are going to do a major shakeup in the constituents in the index, Hang Seng Index, and they may include giants like Alibaba, Weibo, JD.com, some of the big name China companies into the index, which means to say buying just one fund, you have diversified in exposure into Hong Kong and China and into the big technological companies listed in China. Right, so this is I will say incredible news. The estimated time where it will be changed is in August. Okay, as I mentioned just now regarding the retail, this is Fraser Centrepoint Trust, also dealing in malls. So besides Capital Mall, I think this is the second biggest one, and it is forming a nice base pattern here. And recently it broke off, it gap up trading this, and is trading above this trend line. So at this moment, the dividend yield for this Fraser Centrepoint is roughly about 4.8 and P10. So I mean, if we do a comparison, Capital Mall seems to be more attractive because it owns the more of the big name malls, and they are also merging with commercial, so they are having a retail and commercial component into their REITs. So that's all for the investors portion. Let's head over to for the traders. Now, first up, oil price. Okay, this is the UK oil. We can see that recently there is a price recovery after the crash due to the COVID virus. The air demand and shipping demand for oil has dropped. So at this moment, since the economy is starting to reopen, the oil price is starting to recover. Okay, so in this case, right, a lot of the oil and gas companies, some movement. First up is Keppel Corp, mentioned before. So at this moment, is past 2 days, it rallied 2 days, and then today at a so-called like a profit taking. Good news is on lower volume, so I would expect to have more continuation on the upside. So this is a dangerous area. It is trading just below the 200 days moving average. So we just have to be mindful where we trade down here. The rest of the big names like Sembcorp, Sembmarine is still very weak, so we should avoid these stocks. I know it's the darling for many of the investors, retail investors in Singapore, but we should avoid because based on this pattern it's not moving anywhere. Now the small cap is what is moving at the moment. This is Rex International. All right, I mentioned last week before, somewhere around here, so it has moved off another few more days. So right now, with this, it's likely to rest in this area. So we just have like to see it rest in a small range, and then we will look for new opportunity, good news, good catalyst, to trade the next move up. This is Mermaid. Okay, after this base mentioned before also last week, and this time it has moved off quite nicely. So this is a penny stock. So previously there is this move where they clinched a contract with Saudi Arabia, and due to the oil price crash, their price also crashed together. So right now they are recovering, and I think it might make the similar move as they start to realize their profits from the contract with Saudi Arabia. Okay, another oil and gas related stock, Dynamic. Okay, this week had a nice move. So we like to see if we can rest sideways for a few days, then we can look for opportunity to go long. Yeah, we just have to be mindful of the possible resistance around this area, the first one, and the second one at 156. So 143, 156. So if it does rest and move off, we just have to be mindful of possible sellers coming up around this area. Okay, just now I mentioned about precious metal moving off. This is CNMC. So after a nice consolidation type pattern, it had a break off when gold started to move up. So right now it's trading sideways. We like to see if can trade something similar like this, sideways tight, and then if there is a gold movement in precious metal again, we would like to buy into this, for a short-term trade upwards. So just be mindful of roughly around 25 cents. This is the area where the traders are trapped previously. So if price starts to move up to about 25 cents, this is where you should be looking to take profit. Okay, one very interesting stock came up. This is Yoma Strategic. All right. There's a gap up due to news that they had formed a strategic partnership with Ant Financial. Alibaba's the other Jack Ma's another company, Ant Financials, that deal with loans and financing. So they form a strategic partnership with Ant Financial to deal with money lending, forex exchange, and so-called remittance in Myanmar. So with Ant Financial's technology and Yoma Strategic's kind of market share, I think they will be is a is good in their expected revenue in the future. The reason for the move recently. So if you can see, look for a pullback, as it starts to rest, can look for opportunity to go into the stock. So this is Yoma Strategic. Sun Power. Right, Sun Power deals in solar energy, solar panels in China. All right, so recently had a move here due to its results. So its results not bad. So we can also look into somewhere here if it starts to form a tight pattern, tight range with lower volume. We can look into buying this stock, especially when the market is good. Okay, last week I mentioned about Wilmar moving off for its commodities. All right, so at this moment, the past 1 week it has been resting and resting above the 200-day moving average. This is a very good sign. All right, we would like it to continue resting sideways in this area above the 200 days. And if it starts to break off the $4, right, with a lot of volume, we should be looking to trade this and on the long side. Okay, you can trade this on the short term or on the mid-term basis, because if it starts to move up, most of the moving averages are be turning up, and that is a positive sign. Sri Trang Agro, all right, also on a palm oil basis, only Wilmar and this stock Sri Trang move. Okay, the rest like Bumitama, Golden Agri, Indo Food, they didn't move at all. So it's not really a sector specific. It could be a company specific. mainly due to the earnings. All right. We have this perennial holdings. We have a strong break off this 200-day moving average. So this is quite a V recovery. And with such volume coming in, right, I would say that it's almost the end of the run. If we will want to trade this on the long side again, I would rather see like a 1 month rest sideways or above the 200-day moving average, or probably retrace back down. And if it holds here at the 200-day moving average, we can look at probably buying this to trade on the second wave. Okay. That's all for the traders portion. Do you guys have any questions or any stocks that you will want me to take a look at? Okay, if not, in summary, right, at this moment, the Singapore market is kind of weak, all right, as compared to the global markets, especially the US. The US is very strong. Okay, so in summary, overall, it's still weak, and if you want to trade short-term trades, you have to be very specific and you need to come and go in and out very fast. At this moment, as I showed during the traders portion, most of the stocks are basically small cap stock, penny stocks. And usually when such sectors move, it's usually the end of the rebound. So for me, I've mentioned in past videos many times that I'm expecting a second wave down, all right, from here. So which means to say the expectation is that the second quarter results will be very bad. Maybe that will be the so-called the low point from which we can enter to go long. Okay, so in summary, that's the reason why I also say that is that most of the bank stocks are weak. Okay, despite the gap up, it have a sell down today, increased volume. Some of the big cap stocks like Jardine, Strategic, have a big sell down. You know, even like SIA, just now we talked about this. SIA is also on the downside. Even Comfort Delgro, SATS, all these STI component stocks is all moving downwards, which means so that's why in summary, the whole market, especially the big caps, they are weak, except for the REITs, where they are opening up their malls again, their offices, they are restarting their businesses. These are where I think the revenue will come in. So just like I mentioned before, Capital Mall, Fraser Centrepoint, Sasia REIT, and commercial, Capital Commercial. So that's all for today. Thank you guys for attending this meeting.